Okay, welcome to our second quarter 2025 financial overview of Comcast Corporation. And what we're going to do is we're going to present an overview of the two segments that make up Comcast business. The first is the connectivity and platforms, which is basically the cable and sky operations. And then also the second segment is the content and experiences, which is fundamentally made up of their NBC Universal business. Okay, so the first thing I want to point out here is that all the numbers on these slides are presented in millions. So a little confusing, but if you do the math, 25,000 times 1 million, this shows the top end of the scale is really 25 billion. And another example here is if you take this blue bar here with 20,389, that would, if you multiply and do the math, that would really translate to showing that blue bar showing $20.4 billion. And that's the same, these figures are on the same scale of millions throughout the entire presentation. So we're going to compare the second quarter of 2025 to the second quarter of 2024 for both these two segments. And we're going to look at revenue and EBITDA. And as a reminder, EBITDA is just fancy accounting or financial word for cash flow, or cash flow that a business generates. So starting off with connectivity and platforms and looking at revenue in comparison to the two quarters from the second quarter of 2024 to the second quarter of 2025, they had some anemic growth, less than 1%, about 0.7%. Same thing for EBITDA, less than 1%, 0.5% there. The difference in those percentages likely due to higher costs, reducing the cash flow. And then looking at the content and experiences, they had some modest growth of 5.6% in revenue and a little less than that in EBITDA growth of 3.6%, again, probably due to some higher costs in there. Interesting thing about this business is although that growth is anemic or modest, they do produce a lot of cash. So just on a quarterly basis, over $10 billion in cash. And that money is used for making new investments, repurchasing stock to drive stock price, and then also to issue dividends to their shareholders. One other interesting point here is that when you look at the connectivity and platforms in comparison to content experiences, the connectivity and platforms is the 52-pound beast here, where it's over 2 times the revenue, produces over 2 times the revenue of content and experiences, and 4 times the cash flow in terms of EBITDA. So, about 8.5 billion versus about 2 billion in EBITDA here. Also, then looking at connectivity and platforms, you can see that they've had some modest or minimal average monthly revenue growth here per customer of less than 1%, but that's been negated by they've been losing customers over time, and that's been happening for a little while now. In our prior presentation, in our first quarter 2025 presentation, we looked at this over a longer period of time, and it's been happening for a while. Now let's move on to content and experiences. Again, this is the NBC Universal side of the business. They have 4 business units, really 3. I split out Peacock, which is embedded in their media business. So they have 3. I've shown 4 here with Peacock out separately. And in terms of the media, their revenue went down by 1.3%, and their EBITDA went down by 7.1%. And this is likely as a result of competing, their TV stations having to compete with streaming, and also higher costs of production. You look at the studio business, they had a nice 8% growth in revenue, but looking at they had a big drop in percentage-wise drop in EBITDA, and also looking at the EBITDA of this business compared with the other 3 businesses is much lower and is a little bit alarming. But if you go back and look at the studio business on an annual basis, it had been growing all the way up through 2024 annually on a nice basis. This is EBITDA. And when you look at just the first 2 months of each of the years, 2025 is in line with the prior 4 years. So what this shows me is it's not a seasonal business. And when you're looking at a quarter, comparing quarter over quarter on an annual basis, you're really looking at trying to factor out any seasonality. And there's really no seasonality here. They just have quarters that are up and down for a variety of reasons. So looking at this on an annual basis is more appropriate, and it seems like it's fine and healthy. The $85 million in this of EBITDA in the second quarter is not out of line with what happened in some of the prior quarters. And then moving on to theme parks, you can see they had nice revenue growth of about 19%, but that same growth didn't transpose into the EBITDA, where they only had about 4.1%. So it looks like they opened Epic in that second quarter, their new theme park in Orlando, but probably higher costs and costs associated with opening Epic pushed down EBITDA in the quarter. So it'd be interesting to see what that looks like in the third and the fourth quarters. And then Peacock had some nice solid revenue growth of about 18%, and they've nicely narrowed their loss from $348 million in the second quarter of 2024 to $101 million in the second quarter of this year. And then looking at their subscriber growth, it flattened out here in the second quarter compared to the first quarter of 2025 after some reasonable growth in prior years. But that looks like that may happen because of a pretty significant price increase that they put in place, which helped push down the losses that they'd had. So there you go. You have it there. There's our second quarter high-level 2025 financial overview of Comcast.